Okay, good morning, everybody, and welcome to the OTC Markets Group Thought Leadership series of webinars. Today, we're going to be discussing understanding how your ordinary shares trade in the US and why it's important. Just a couple of housekeeping items so we all know how the flow will move. All participants will be on mute. The presentation will last approximately 25 minutes, after which there will be a question and answer session. For those of you asking questions, we ask that you type them into the chat box in the upper right corner of the page. We will answer as many questions as possible with the time remaining. There is also a download available, which is an FAQ, frequently asked questions on ordinary shares. You will be able to download that at any time during the presentation. This webinar will be recorded, and a link will be emailed to all registrants, along with a copy of the presentation and the downloadable handout on ordinary shares. A copy of this webinar will also be archived to the OTC Markets website. The purpose of this webinar today is to explain an often misunderstood US quoted ordinary share, which is a 5-letter ticker ending with the letter F. What are they, how they trade, and what this means for investors. We have joining us today, distinguished panelist Jacob Rappaport, who's the Managing Director and Head of Equities at StoneX Group. Jacob serves as the Global Head of Equities at StoneX Group, a Fortune 100 company and leading provider of financial services, financial execution services, risk management, market intelligence, and post-trade services across asset classes and markets around the world. Mr. Rappaport is responsible for the company's equities activities globally, which include wholesale market making, global agency, high and low touch sales and trading, prime brokerage, as well as wealth and investment management. He has held roles at StoneX and predecessor companies since joining in 2005, including Head of Americas Trading and Head of Market Making. Since taking the role of Head of Equities in 2013, the segment has grown over 600% and became the #1 ranking market maker in ADRs and foreign securities traded on OTC markets. StoneX makes markets in over 10,000 securities. 7,500 of those securities are quoted on OTC markets. We are delighted to have Jacob join us today. And also joining us is our own Chris King, who is Head of International Business Development at OTC Markets. So with that, I want to just move quickly into the content of this discussion. Jacob and Chris, thank you for joining us. Jacob, could you just give us an overview quickly of what are ordinary shares, why are they there, and how are they set up for quoting?
Sure, thanks, Andy, and thanks for having me this morning. It's a pleasure to be on with you and to shed some light on the mechanics of how your shares globally are traded in the US. The world has become a lot smaller and more accessible, especially for US retail investors. Since the COVID-19 pandemic, we've seen a dramatic and exponential growth in volumes for not only the popular US NMS listed securities, but also in the OTC. So I think today the goal is to give you an idea of what we see in our role as market maker and how and why your shares get listed and the mechanism for trading them in the US and how you're gaining exposure to US retail and institutional investors. So just an overview of why F shares exist. A popular misconception about F shares, or as we call them, ordinary shares, the foreign ordinaries. The popular misconception is that they're a different class of security. F shares, they settle in the local market. They share an ISIN, or an identifier, with your local tickers in their various global jurisdictions and exchanges, and they settle in the local market. The real difference here is that the 5-letter US ticker is simply a mechanism for US execution and matching. All settlement happens globally. So a popular question we get from issuers is, Well, why do I have an F share? I didn't create this. I didn't ask for it. How do I control what's going on here? Well, the answer in how you got that F share ticker is from a market maker like StoneX, choosing to file Form 15C211 with FINRA for inclusion in the OTC dealer, which, as you know, OTC Markets has an SEC regulated ATS that allows market makers to post two-sided quotes and compete for best execution and pricing during US hours. So the process is facilitated oftentimes without consent or knowledge from the issuer. A lot of the requests that we get at StoneX through our website and through inquiries is from issuers asking for StoneX to file Form 15C211 and bring these companies to the OTC marketplace. That's typically not something that we do. At StoneX, we've filed approximately half or greater than the new ADR and FAR and ordinary listings in the OTC market in the last 10 years. And the reason why we've done this is to create greater price transparency for our clients, which include global banks, wealth managers, retail brokerages, which I mentioned have been very high volume. So by including these tickers into the OTC dealer ATS, it allows for better price transparency, greater competition, and an enhanced trading experience for our clients. So when we file a new Form 15C211 and include your 5-letter tickers into the OTC dealer, we're doing that because we want to make the execution experience for those clients a lot easier, faster, more efficient. So it promotes trading for your shares in a more efficient fashion in the US.
Jake, thanks for the introduction and clarification on the simplicity of ordinary shares. As a market maker who operates under the MPID INTL, so many of you may have seen that on the quote page, can you walk us through how ordinary shares trade from order through execution if I'm an investor who, goes to my point and click on Fidelity if I'm in the US, all the way through to the execution?
Sure. So beginning with that US investor, you used Fidelity as an example. So whether you're a trader in your parents' basement, or you're a sophisticated trader on the Fidelity website, or Schwab, E-Trade, whomever, you would go to pull up a ticker. All of these online brokerage systems, whether it's Robinhood or Bank of America, Morgan Stanley, et cetera, all of these brokerage platforms have 5-letter foreign ordinary tickers. So whether you're looking to trade something like Daimler or Rolls-Royce or even Nintendo, those are available for trading. So a client can enter an order into that app or into that website, place it with a broker. There's a number of mechanisms to affect an order, but that order is going to go through the brokerage platform to their routing mill, and it's going to make its way to a market maker like StoneX, like some of the other market makers that you read about in the press on a daily basis, who are getting a lot of attention right now. We compete for those prices based on best execution. We're bound by the quotes in the United States in terms of best execution. And there's really 2 ways that a market maker will execute. We're always bound by the US quote, and that execution will either happen as a pass-through to the local market, or a market maker will take risk and use their own capital and take the other side of that client trade. So in any case, the order is going to settle in the local market, and the order is going to find its way to the local exchange. It's just a matter of when. At StoneX, we have a product called Passport. Our Passport product will execute ordinary shares in the local exchange and pair off against a US client in real time under the US ticker. So to better explain, an order is entered by the brokerage service. It comes to StoneX. StoneX is going to find liquidity in the best possible market. And that means it'll be, if the local market is the UK, or it's Germany, or it's Canada, or it's Mexico, wherever that local market is, StoneX is going through our proprietary technology. We'll find the best price available in the world, including the local market, the US OTC market, and our own internal liquidity pool, and execute that client order. So in the US, we have 2 hours roughly of overlap with most European markets where our Passport product will be running. It runs all day through Canada and Latin America. And for those hours after the European close and throughout the US session when Asian markets are closed, this is going to come from risk trading. Now, Andy mentioned at StoneX, we hold about 25% market share in OTC, ADRs, and foreign ordinaries. So as you're entering orders into these various online brokerage platforms, there's a 1 in 4 chance that it is StoneX liquidity executing these orders. But I think the important thing for issuers to know is that your shares, while they're executed in the United States, liquidity is going to come and settlement is going to come from the local market.
Thank you, Jake. That was crystal clear. And Chris, I want to turn to you for a second. When a company has an ADR and an ordinary share, how do they interact and complement each other in the process? Because many of our issuers have both side by side.
Yeah, thanks, Andy. It's worth covering off the ADR piece, not least because part of this discussion is sort of myth busting or debunking, the myths. An American depository receipt is a US security representing shares of a non-US listed company. The shares are held in custody by a depository bank on behalf of the US investor. But it's worth noting, and I'd encourage companies that are listening to this discussion to go onto the otcmarkets.com website and just look to see kind of what presence you have here, because that's normally the starting point for a discussion with us. The ordinary share we mentioned has an F at the end of the ticker symbol. ADRs have a Y at the end of their ticker symbol. All level 1 ADRs trade on OTC markets. So they do complement each other. They certainly don't compete. As we talked about, these are ordinary shares ending in a letter F. It's not a separate class of security. So, think about your cap table and your entire float. Just because you have an ADR doesn't mean investors don't want or need the ordinary. So generally speaking, approximately 5% of outstanding shares are held in ADR form. The rest should be thought of as the F share or the ordinary share, i.e., the 95% not held in ADR form. The ADR is an effective settlement mechanism, but in order to create the ADRs, you must first buy the ordinary. Initially, there's no outstanding ADRs in any level 1 program. The number starts with 0. So everything must start by purchasing the ordinary. And US investors can convert their ordinary shares into an ADR, the Y share. And so ordinaries or Fs can then end up as a Y or an ADR. And for some, the ADR is an effective way to hold the shares. So I'd say, in conclusion, options for investors to buy or hold stock is obviously beneficial, but the two certainly complement each other. I don't know if Jake would add anything to that.
I think you're exactly right. I think from the market maker perspective, when it comes to an F share or a Y share, ADR or foreign ordinary, we're indifferent. As a market maker, you don't really get to pick and choose what you trade. It's the obligation is to stand by, be ready, willing, and able to provide liquidity as a customer order arrives. So it comes down to the selection of the investor. And in the case of retail, I mentioned these are incredibly accessible securities. It just is a matter of entering it into the brokerage platform, and that retail investor can choose ordinary share with an ADR. They might not even know the difference. It's that easily accessible. And from a market maker perspective, we're just looking to execute as the best price we can. For some institutions, there's incentive to trade ADRs in terms of having mandates to own U.S. securities. An ADR will give the opportunity to invest globally without technically investing outside of the US, but we're seeing more volume growing in the F-share market. And from an execution standpoint, we look at them as one and the same. And for a lot of securities, they have both an F-share and an ADR that trade OTC. And I guess the mechanism that prevents those two prices from crossing is market structure and efficiency. The market is an efficient place. Both we and our competitors do an efficient job of keeping an orderly market. And I think if you see those prices become dislocated, that's going to present a market opportunity in terms of arbitrage that's going to quickly correct. So we do see it as an efficient marketplace, both in the Fs and the Ys. So from our perspective, we're quite indifferent.
So I'll pick up on a couple of topics that you've touched on there, Jacob. You mentioned the trading window. So for companies globally with representing an issuer listed on a foreign or a non-US exchange, what we're saying here is that by being here, by being accessible, by being tradable during US market hours in US dollars, you're really benefiting from an extended trading window in your ordinary share. Certainly I get asked frequently about who uses this platform. You mentioned retail. There's been an incredible explosion in terms of volume coming from retail. Shares quoted on our market are easily traded through Schwab and Fidelity and E-Trade and Ameritrade. So I think for the issuer, they shouldn't care where the investor is located and where they fund their portfolio. What we're really saying is this is an efficient mechanism that just enables a broader amount of US investors to trade their stock. But who uses the platform? It's not just retail. It's family office. It's managed accounts. It's smaller institutions. So it is worth reiterating that while we're talking about plumbing and trading generally, the key benefit here is for the issuer just to be more effective in US IR programming.
Thank you, Chris. Thank you, Jake. For those of you who are on, I just want to clarify for you that the word ADR is an American Depositary Receipt. We have used the word ordinary share, which is sometimes called the F share because it's basically a 5-character ticker ending in the letter F. And the ADRs, the American Depositary Receipts, end in a 5-character ticker ending in the letter Y. So for some of you who wanted to get that clarification, I wanted to just put that out. But this is very interesting because now we have this interaction between the home market and the US market. So I think that I want to turn to Jake and, how does this light up the screens? We've put up a slide here, which is Rolls-Royce ordinary share. We see a handful of market makers. Jake, can you walk us through and explain the quote montage and the interplay between the US and the home market for pricing and parity purposes? We see a lot of brokers in there, Jake.
Sure. I mean, what you're looking at is a two-sided quote represented by dealers in the United States. And we dealers, the market makers, we are bound by limit order display rules, which means that when we have an order from a client, whether retail or institutional, we are obligated to represent that price on screen. So oftentimes, you're looking at the example on your screen right now, you see the stock is bid at $1.96 for 256 shares by $1.97, so a penny wide for 1,200 shares. Unlike exchange trading, the OTC market is a negotiated market. It's a dealer-driven market. And oftentimes, a lot like our lit exchanges in the United States, liquidity fills in that's not exactly lit. So we are obligated by limit order display. That's why you'll see that sometimes there's size orders of various quantity. That's representing a client order. However, I can tell you at StoneX, if we were to receive a client order, and in this case, you'll see StoneX or INTL is not active on the bid or offer, but for a client order that arrives, we are going to execute that client order at or better than the NBBO. That's the nearest bid best offer. So regardless of whether our firm's price is advertised as 196 or 197, we will be executing there and often executing at a better price in between that spread. This is a mechanism you read about a lot in the US. It's a very popular topic with the SEC right now in terms of best execution, payment for order flow. You're in these circles where you have market makers competing to win market share and to get executions in your orders. So it is a highly competitive and efficient marketplace. This marketplace began as one that was known for having wider spreads and an inefficient market structure years ago. Since going electronic 20 plus years ago, the space has grown more and more efficient. We've got more participants from market makers to dealers, and volumes have grown exponentially from retail and institutional. So the price you see on screen is typically indicative of what you're going to get or better if you're a retail investor. As I mentioned, during live European hours, when there is an overlap, oftentimes liquidity will come from the home exchange and print in the United States and a net USD price. And oftentimes after hours, it's going to be various market makers and other participants bi-directional order flow pairing off against those orders. So the space has come a long way. All of these trades that execute in the OTC dealer will match on FINRA's ORF, the over-the-counter reporting facility. So regardless if the execution happened on a home exchange or it happened dealer to dealer in the United States, you will see a print on the tape, and those trades will be matching on FINRA's ORF.
Jake, that is a great way to explain what we see. I have two questions that pop up. One is, can you explain what limit order protection is for the benefit of our audience in terms of placing trades?
Sure. Limit order protection means that if any market maker is holding a client order, so if I'm holding a client order to buy Rolls-Royce at $1.96, I am obligated to execute that order in its entirety or to execute everything that I interact with at $1.96 until that order is exhausted. We are obligated to represent these prices. It's part of our best execution mandate. A lot of times you'll see that, as I mentioned, in the example on screen where StoneX is not on the best bid at 196. However, we will execute there because we are obligated. So many times we get calls from clients saying, well, I have an order at a different market maker at 196. I see the stock is trading there, but I'm not getting filled. And that's because if StoneX has orders, we're going to be trading at 196 against our clients. We're not necessarily bound to interact with other dealers, but we are bound by their price. So the price on screen is the prevailing nearest bid best offer. We are obligated to represent our client orders and execute at those levels or display that order until that level is exhausted.
Thank you. So just for the benefit of the audience, all orders that are placed on OTC markets, for example, through a Fidelity, must be placed as limit orders to get executed. The second part of the question, you touched on it a little bit earlier. When F shares are executed, or ordinary shares are executed outside of market hours, can you just come back and just touch upon that briefly? If London is closed outside that window or whichever local market it is, how that works for the benefit of our issuers online?
Absolutely. So I mentioned during live market hours, we have a proprietary product called Passport that will automatically seek liquidity from a number of venues and pass through the best possible price to the client. Well, after the European close, when it's 7, 8, 9 o'clock, 10 o'clock at night, when folks in Europe are going to sleep, we're still trading these securities. And I mentioned that the competition is tight. We've got high frequency market makers, hedge funds, all sorts of participants trading the stock back and forth throughout the US session. But inevitably, as market makers, dealers, clients are all trading with one another, eventually, unless these orders are paired off against one another, a market maker will need to use their own capital and take risk. We are in the risk business at StoneX. We do take risk against these orders. We do it to fill in and provide an efficient market. Our clients expect to get executions that are in line with local pricing throughout the US session. So you will see spreads continue to remain tight. It is an efficient marketplace long after European markets are closed. A lot of that is thanks to competition, ETF pricing, foreign exchange pricing. There's a number of factors.
Yeah, the question I had in this slide is we have an Australian issuer, Deep Yellow. How do ordinary shares and home market shares work together? And explain how this is good for the shares that trade in both the US and the local market.
So your question is about how ordinary trading would work in the local market relative to the US?
Yeah, how does it work together to efficiently expand the market for an issuer?
Sure. The interesting thing about US trading, especially we see this for Asia, is that it's an extension of local market hours. So looking at US Eastern Time, most Asian markets are closing around 1 a.m., 2 a.m. New York time. So when the US investors come in the morning, that trading day, while it's closed in Asia, we have the entire US session to continue on the same trade date. So we do see a lot of institutional investors who will trade orders in your local tickers throughout the evening and then come into the US, but OTC trading gives them an opportunity to continue that session and trade throughout the day and extend the trading hours for those tickers. So oftentimes we serve as an extension of the local market. I think a lot of times, especially in Asian markets, the activity that happens in the US throughout the day, as markets move in the US, that's a good indicator for where markets are going to move that evening in Asia. So I think there's two primary factors. It's an extension of trading hours, and then also a preparation, or whether it's hedging or preparing to find liquidity heading into the next day's session.
I think it's worth mentioning that not only is this an extension, but the premise of this whole discussion and the business that you're operating is really it's important to mention that a lot of companies just naturally assume that anyone can buy their shares just because they're public. So I just wanted to kind of mention that, and this is the framing of this discussion is, don't think that just because you're on an exchange, and have high quality reporting and disclosure and you're transparent and high governance standards, it's a complete misunderstanding to assume that people can just buy your shares because you're public. And so, a lot of this plumbing discussion, yes, it's extension of trading window, but it's also just about fixing a pain point, right? If you're a company that's quoted or listed outside the US, how do you switch on the lights and actually access a new audience that wouldn't be able to buy your shares otherwise?
Let's talk a little bit about the broadening of the benefits, the broadening of the shareholder base for issuers. Chris, what does the US availability of ordinary shares mean for US investors?
I'd probably flip that question a little bit and talk about kind of, what does it mean for companies? So, if you're listening to this webinar and thinking about, for context, what does this mean for you? First of all, we mentioned stock exchanges all over the world benefit from our platform because of the injection of additional trading volume onto their exchange. But, if you think that through, it's a unique model that just adds efficiency to the home market. But it provides US access for the issuer. You've mentioned on this slide here that there's no SEC filing requirement. There's no Sarbanes-Oxley. There's no huge cost and complexity as would be involved in listing in the States. But by being on our market, and I would say specifically on our OTCQX, the higher market tier, what we're really saying is, look, switch on the lights, commit to marketing and engagement with investors in the US. But really the outcome here is increased liquidity on the home exchange, increased volume on the home exchange, grow your US ownership, grow your accessibility. So that there's lots of sort of benefits of being here and quoted here. And if you can come to terms with the fact that the reason we're having this conversation is that it can be difficult and costly and challenging for a large number of US investors to buy stock without this solution. Then I think this is, a meaningful tool that companies, IROs, CEOs, CFOs should be aware of, and we should be engaged and talking about things that you can do as best practice. Just one other thing I would say that we had a third party carry out some analysis on trading stats. So for companies that had joined our QX market, so we call our best market OTC QX, it's where you'll find Roche and Heineken and Adidas and Hugo Boss and some well-known kind of household names, but hundreds of others. In that academic study, it looked at the impact to the home exchange when companies join OTC QX. So, we saw on average of about 500 companies that joined over a 10-year period. On average, the home market liquidity increased by more than 25%. On the home exchange, and then on the US market, so we're talking about Jacob and market making, liquidity increased by over 60%. So, with most companies want to increase valuation or achieve fair valuation and grow their US ownership, this is a meaningful market on which to build on that objective.
Thanks, Chris. Jake, we know that you're involved in a lot of capital markets activities. Can you talk a little bit to enhancing the corporate issuer profile through corporate access and utilizing the fact that a company has an ordinary share to expand and broaden their shareholder base in the US?
Absolutely. I think traditionally this was about, as you mentioned, doing capital markets work. So whether it's partnering, going out, getting, QX or QB listing, getting in front of institutional investors, doing roadshows. I think that was the historical way of doing things, and it's still very effective. I think right now, during and post pandemic, a lot of it has been digital. I think from the retail perspective, folks are learning about companies as much from chat rooms and Twitter as they are from traditional news outlets. So I think for gaining exposure into the US, it's important, first of all, to have all of your filings up to date and in English. I think it's important to have a high level of governance, and also, getting exposure into the US through either having an ADR program, in this case for foreigners, partnering with a firm like OTC Markets or through StoneX to meet our global network. I think those are important ways to get access and interest into the US. And I mentioned before, when we're bringing a company to the OTC dealer ATS, we're doing it based on client demand. That means clients are interested. A lot of times, if we were to just file a 15C211 and add a security to the dealer, it might not trade. We need clients to take an interest and get involved. And that begins with having your ticker traded OTC and having exposure into the US.
Yeah, so good points, Jacob. Thank you. I generally encourage companies, again, I mentioned, go on the otcmarkets.com website, take a look to see what your status is here. I encourage companies to do more than rely on that pink market quotation, as Jacob was suggesting there. I'll share some stats relating to companies and their performance on our different market tiers. Year to date, there's been more than 500 billion in dollar volume. As we mentioned, substantially more gets sent back to the home exchange, and so we talked about how market order begins as a buy order on the F ticker, but ends up settling on the home exchange and printing there. QX companies make up less than 5% of our client base, and yet make up 34% of the total market volume. The pink market, it is the default market, so many of you will be looking and seeing either a gray or a pink ticker symbol. You weren't engaged in that setup process, but it does suggest that there's interest here. The pink market has thousands of securities, about 18 times that of QX, and yet only sees twice the volume total. So I think that's quite telling. I think, Jacob mentioned better governance, be compliant with US regulatory requirements, be more visible, be more accessible. And that's really what we've built here, is the reason for the different tiers of the market are to help those companies that want to be proactive and do more marketing into the US. QX and our QB, venture market, certainly support that.
Thanks, Chris. Thanks, Jake. I'd like to turn to some questions. For any of you who have questions, please, post them up in the upper right corner in the chat box. But we're already getting population of questions. And Chris, I want to start with you. Are dividends paid on foreign ordinary shares? And
yes, the simple answer is yes. They're paid to the investor as, they're an investor in the ordinary share. So, they'll be paid via beneficial holdings on the local register.
There's a question, what happens if there is no liquidity in the ordinary share on OTC? How does that work if there's a buy or sell order that is placed? Jake, maybe you can walk us through. So repeat the question, what happens if there's no liquidity in the ordinary F share on OTC? How does that work if a buy-sell order is placed?
So typically, if there's no liquidity, meaning that it's not, or there's very few market makers, or the quote might be a little bit wider than normal in the US, how would that liquidity work?
Yes.
Sure. That liquidity would come from a market maker. So as I mentioned, these clients, whether they're banks or brokerages representing retail or institutional investors, there is an expectation. These investors are informed. Typically, there has to be a quote that correlates to the local market, and it is the obligation of a market maker to provide liquidity at size. In many cases, even for securities traded over the counter, there will be a request for quote mechanism, meaning a block of securities will be competed over, and the execution will go to the winning price provider. So it's very seldom, if ever anymore, that there's a circumstance where a quote is very wide and pricing becomes dislocated from the local market. Market makers want to win order flow, and the best way to do that is to provide competitive, very tight pricing correlated to the local market.
I think it's also worth mentioning there that often it's a lack of information or a lack of transparency that leads to either the belief or maybe the misunderstanding that there's not liquidity. So I know on our bottom market, the pink market, that there tends to be a lack of transparency. But on our premium markets, we show the full quote montage. And so, if you're looking at a stock on pink and all you see is a bid of, I don't know, $1 and an ask of $1.05, and it's one by one, it doesn't look like it's a very liquid security. But if you're on a higher market tier and you're able to see the full level 2 quotes, like on the slides that we showed earlier for, I think it was Rolls-Royce and Deep Yellow, we got to see the full montage. And so I think that as a feature is important because it creates comfort, it creates transparency, and as an investor, I now know I can buy and sell a much larger amount of shares, and I know the price that it will be executed at.
And Chris, we do get those answers from those questions from clients when they see, a particular OTC security isn't very liquid, and clients will ask us, well, should we wait until the foreign market opens, or can we trade this now? And our answer is notably that no, you can trade this during US hours, and as activity picks up, prices will tighten, liquidity will fill in. So oftentimes, whether a stock appears to be liquid or not, that liquidity can be found and it does fill in pretty quickly.
Thanks, Jake and Chris. We have another question coming up, and this is regarding shareholder voting. For purposes of shareholder voting, are proxies sent to vote solicited from foreign ordinary shareholders? Chris, would you like to answer that for foreign ordinaries?
Yes, the investors are investors in the ordinary share, and so they get the same access to the same information through the custody of the shares.
So in other words, home market prevails.
Correct.
Let's see. I have another question that's popping up here. If a shareholder buys through a discount broker, how do the shares settle? Who holds the shares that are shown in the shareholder's account at the discount broker's firm? So I'll repeat that again. If a shareholder buys shares through a discount broker, a point and click type broker, how do the shares settle? Who holds the shares that are shown in the shareholder's account at the discounted firm? Jacob, maybe you can walk us through that.
Sure. I mean, for any investor investing in these securities, the shares are going to be, while they might be, held in custody at the clearing firm for the particular broker, the beneficial owner is the investor.
Perfect. I have another question coming up. If I am a North American shareholder, how am I recorded on the share register in the local market?
So that would normally just be in street name. So the investor, and I suppose I'll broaden the question to just sort of transparency into understanding ownership. These are investors, just like from anywhere else in the world, that have bought the ordinary share that's available on the home exchange. So investors typically, and I'm generalizing, but typically they would appear in street name on the share register.
Okay. Thanks, Chris. I have another question coming up. When selling an ordinary share, can the seller request that only the local market is approached and that it not be settled? Reason would be for trading exemptions of an affiliate regarding selling to a U.S. purchaser race SEC requirement. So let me repeat that. When selling an ordinary share, can the seller request that only the local market is approached and that it not be settled? Reason would be for trading exemptions of an affiliate regarding selling to a U.S. purchaser array regarding SEC requirements. Jake, would you like to?
Sure. We see that from time to time. I think it depends on your brokerage platform. For a retail investor who's in their dorm room at university or living with their parents, probably is not going to enter those instructions. We see it for institutional investors all the time. Some orders are directed to a foreign market, but typically for trading in the dealer, I mentioned, those trades, you're going to be trading in the dealer. You're going to be trading against other order flow with other dealers, all of whom are qualified institutional buyers. So I guess it depends on the investor profile and the brokerage firm. But I can tell you as a market maker, we do see those order types typically for institutions that orders are directed to work on a particular exchange.
Thank you, Jake. We have another question now, and this one is a combination of ordinaries and ADRs. If I'm an investor in an ordinary share and want to move my holdings into an ADR, an American Depository Receipt Program, for the same share, how do I ask my broker to do that for me?
So the investor just simply needs to ask the shares to be converted to DRs or settle in DRs.
So it doesn't sound like there's much of a complicated process there to hold in the choice.
No, I think, and typically there is a conversion process. There's several ADR depository banks, and typically, ordinary shares are sent to the depository bank. ADRs are returned either when creating ADRs or canceling ADRs. But I think the question for moving holdings from a foreign ordinary security to an ADR or vice versa is probably going to be handled differently based on the brokerage house or the custodian. But in any case, I can tell you from a market maker perspective, we will carry both an ADR and an ordinary position. And it really, when it comes time to to consolidate those two positions, we effect the conversion through the ADR depot.
Thank you. I'm cruising through the questions here, so okay, we've answered some of these. We have another question that has come up, which is, why do some brokers choose to trade or restrict trading in ordinary shares? Jay, maybe you can expand on that a little bit, that not every broker chooses to trade or restrict trading in ordinary shares from the point and click.
No, I think fewer are restricting trading. I think that if you're going to have your shares restricted from trading, it's probably because you don't have filings that are in English. You're not trading, it's trading in the expert market, or it's not on the QX or QB or some of the higher tier levels in the OTC dealer. But that's really security specific.
Thanks. We have another question which relates to the new 15C211 reform impact on the current and future of ordinary shares. There was a new rule that went into effect on September 28th, changing the way securities can be approved for a quotation. Jake, maybe you could give us a little insight into what impact the current and the future may have on trading ordinary shares on OTC markets.
Sure. This regulation just went into effect about 4 weeks ago, so I think it's still early stages in determining, the outcome and the long-term effects. But effectively, this was to increase the standards of listing requirements over the counter in terms of displaying quotes. So the intention, I think, is very pure, to make a more efficient marketplace with higher standards for listing. I think what we've seen right now is some of these brokerage firms trying to navigate what they will and will not trade. So I think it's early going, but the expectation is to see positive results and hopefully better action from issuers to make sure that their securities are eligible and able to be traded at the highest levels OTC.
Jake and Chris, I want to thank you for being participants and panelists in this webinar that we have. We will, just for the benefit of the attendees, we will try to answer all the questions that we've gotten separately by email or outreach. But gentlemen, do you have any 1 or 2 minute closing comments to ordinary shares? And I'll start with Chris first. Chris, do you have any just general closing comments to ordinary shares?
Only that I hope this discussion has served to, provide a more factual overview of what our market does, how it enhances home market, trading, and ultimately how our premium markets help companies to be more effective with their access points into the US. Our contact information, my contact information, is available on this last slide. So I'd encourage companies to get in contact, and we welcome a call.
Thanks, Chris. Jake, any closing comments you want to add to for the benefit of our audience?
Well, Andy and Chris, thank you both for having me. It's a pleasure to join you today. I think that in closing, it's important to note that, look, we are advocates for the OTC market, being a market maker and having the leading market share in the space. We are advocates for the market. We do want to stress that this is an efficient marketplace. Clearly, we've got a lot of companies from Tencent Holdings to Nintendo, Roche, Nestle, Bayer, very legitimate blue chip companies that have found trading OTC has been a successful mechanism to get US liquidity without paying the exorbitant fees to the exchanges. So I'm proud of the growth that we've seen over the counter over the years, and it becoming a very viable marketplace. So I think my closing comments to the issuers are, this is a viable mechanism to gain interest from the US and to find efficient trading from US retail and institutional investors. And I encourage all of you to reach out to OTC or contact us through OTC for more opportunities or ways to enhance your profile in the US. But we are keen to see all of you get exposure through this marketplace to these investors, and happy to be a facilitator, an efficient one to that effect. So thank you again very much.
Thank you for joining us. This concludes our webinar. Thanks again to Jake, Managing Director, Head of Equities at StoneX Group, and Chris King, the Head of International Business Development at OTC Markets. A copy of this will be sent to you by email along with the attachments, and it will also be archived on our website within a day or two. Thank you again, and have a great day.